All right, guys, we got a major decision today from the Feds and Jerome Powell, the head of the Feds. And this is sending shockwaves through, well, a lot of different things. First, the stock markets, people's 401ks, IRAs, retirement accounts, people's pensions. Also, through inflation, through interest rates, through people's, and this is going to have a profound shockwave going forward into 2024 with multiple different effects going forward with their decision into 2024 with what they've said going forward. I'm going to let you hear directly from Jerome Powell with what he said, and then we'll go over what this means going forward as this is already having effect in multiple different avenues. This is pretty much going to affect the entire United States, pretty much everybody. Not just stockholders, not just people with pensions, 401ks, but people with credit card interest rates, people with mortgages, people with debt, which is almost everybody. So take a listen to what he has to say, and then I'll show you what is already happening because of what they've announced. Take a listen here.
Inflation has eased from its highs, and this has come without a significant increase in unemployment. That's very good news. But inflation is still too high, ongoing progress in bringing it down is not assured, and the path forward is uncertain. As we look ahead to next year, I want to assure the American people that we're fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We've raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. Our actions have moved our policy rate well into restrictive territory, meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening likely have not yet been felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks that we face, the committee is proceeding carefully. We will make decisions about the extent of any additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has slowed substantially from the outsized pace seen in the third quarter. Even so, GDP is on track to expand around 2.5% for the year as a whole.
Now, this is where it gets interesting, and this is where he had a long speech here, so I'm just going to kind of show you some of the interesting points here. Take a listen to what he says here.
In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. While participants do not view it as likely to be appropriate to raise interest rates further, neither do they want to take the possibility off the table. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of 2024, 3.6% at the end of 2025, and 2.9% at the end of 2026, still above the median longer-term rate.
So he goes on here, and basically he's going to hold interest rates for now, but he signals 3 interest rate cuts here next year in 2024. This sent the stock market surging. The Dow Jones stock market index went to record highs and soared here. The Dow Jones stock market index actually hit an all-time high ever here today. You can see this is a stock market chart of the Dow Jones index here. Just hit an all-time high today of 37,000. 1,090. You can see this is today's charts, and when he gave the announcement, how it jumped up dramatically, up 500 points here today, which goes to show you here that my motto with investing, if you just hold on through the ups and downs, even though we have two wars going on, which has been a tough thing. COVID investing kind of taught me this. I thought that was a very unprecedented thing. It was a really hard time for investing. Uh, really unprecedented. And right now we got two wars, almost world wars going on right now. But even through uncertain times, stock markets, they have some correction and stuff, but over the course of time, they tend to go up. And look at that, the stock market, the Dow Jones index just hit an all-time high. This is why investing over time, things like your IRA, your retirement fund, your 401k, they're not, you don't make rash decisions with them. They're things that get invested over time and they grow over time. Now, of course, if we have a World War III, if you look back at World War II, it took several years to come back, but still over time it went up and corrected. And here we are, still hitting all-time highs. Hopefully we don't have nuclear Armageddon, which ends everything. If everything gets ended, well, I mean, there's not much to look forward to anyways. But this is already having this announcement by the Fed has already, the stock market had already been seeing this coming. And this is affecting a lot of things already. Mortgage interest rates have already been coming down here over the last several weeks. Even though the Fed has not dropped interest rates yet, mortgage interest rates have been coming down. This will affect credit card interest rates going forward. When the Fed actually starts to drop interest rates, we will see interest rates come down even more. Remember, this will affect interest rates for all interest rates. Credit card interest rates, mortgage interest rates, personal loan interest rates, car interest rates, any type of interest rates. Because remember, your credit card interest rate is actually debt. It's actually you borrowing money, believe it or not, from the credit card company, the bank. Okay, personal interest rates, mortgage interest rates, car loan interest rates, car lease interest rates, pretty much any type of debt you can think of is affected by the Fed's announcements and the Fed's decision. So even though they said today we're keeping it steady, it's what they said after that we're going to be reducing interest rates multiple times, most likely in 2024. This actually sent the stock market up, which was a good thing for millions of Americans, because remember that about 50% of Americans um, retire with additional monies like 401ks, IRAs, pensions, and retirement monies. So that actually gave them an instant boost in their retirement funds. And that's just retirement funds. It doesn't even account for additional monies like people that just have regular stocks and bonds and stuff like that. Okay, in addition to that. But it also is good news for people that have debt, which is, I don't know, 90 some percent of American or something like that, because it signals that these are coming down. Mortgage rates have already started to come down on their own. It's just the fluctuations in the market, even though the Fed hasn't actually lowered the interest rates yet. Credit card rates will probably start coming down as well. And we'll probably start to see all these different interest rates start to come down if they already haven't started to come down over the last several weeks, like mortgage rates haven't. So all in all, this is good news all around for Americans. And this also signals good news going forward. This is actually good news for the government as well, because the government will be paying less interest on their debt as well going forward. And it signals good news for the next several years as interest rates come down. And as interest rates comes down, the stock market will most likely continue to go up, and the bond market will most likely continue to go up. Again, nobody can predict the future. World War III could literally break out. I mean, we have two wars going on right now, and they could get worse. So again, that's a rabbit in the hat type of situation, and we have the North Korea, Iran, Russia, and China to deal with. So that's a wild card there. But besides that, this is really good news signaling going forward, and that's why the stock market hit an all-time high today. And going forward, the interest rates haven't even actually been announced to go down yet. They're starting to go down, but those are actually still going to actually happen. So when those actually happen, that's all still yet to come. So I'll keep you up to date here on this. Let me know your thoughts here in the comments. Thank you for liking these videos. It helps out our YouTube channel. It's completely free to do so. Just signals to the YouTube algorithm to send this video out and share this information with other people. Make sure to subscribe down below. That's also free and just makes it so you'll see our videos here in the future. New videos come out here every day at 8 p.m. Eastern Standard Time. Click on this video to see why you need to check your medicine cabinet with some new information that just came out. And also, did China just signal war against the United States? Click on one of those videos next. Thanks for watching, and I'll see you in the next video.